G'day there. Welcome to the closing bell on the 11th of June. Now, there was a big figure released last night in the States, the CPI figure, and the market reaction to that is something I don't know yet. But things are really neatly poised, and I'll show you the charts in a minute, where if that figure comes in hot, we could see a real cascade down in prices quite quickly. Now, the Aussie market in particular is the one that's on edge now, with the 50 basis point rise during the week. That's knocked the stuffing out of the banks, and the banks were the only thing holding us up to begin with. And you know, you've seen lately the ASX 200 holding up beautifully for really the last year. And in the last 6 months with US stocks selling off, overall, we've managed to hold our line pretty well. But with the banks now starting to fall over, fears that its bad debts will be on the rise with rates spiking higher, that pillar of support is gone, and a more general sell-off could ensue in that ASX 200. And I've been showing you that setup for quite a while, and I'll show you the chart in a minute. But you know what happened to that CPI figure more than me, and that setup in the S&P 500 is actually sort of at a point where if those figures come in soft, if the CPI figure is actually all right, it is sort of a setup on the weekly chart where it could really have a big bounce from. So that'll be interesting to show you. It'll be hard for me to make a big statement about which way it's going to go when I haven't seen the figures yet, of course. But let's jump to the charts to see just how on edge the charts are. So this is the ASX 200, or the futures on the ASX 200. And you'll see the week that we've just had has been a very poor one, with the banks getting hammered. That rally that we've seen over the last few weeks, now all of a sudden turning down quite rapidly. And we have a few lines in the sand, don't we? The lows that have been created over this last few months. This is, you know, the total correction that we've seen so far from around, early last year. The market really has been going nowhere for a year. Feels like a bit of a topping formation to me. There's just lots of selling pressure up there. And if it breaks down below the low of the correction, watch out for what can happen. It can sell off rapidly. And I think also, just to state the fact that there's now, a year worth of buying sitting here with the markets having not rallied. So that's a year's worth of buying that if we see a sharp sell-off soon, all of a sudden, all that buying's out of the money. And when those people hit the sell button, and it all happens pretty quickly, that's a lot of volume to come onto the market when people aren't really wanting to buy. So all of a sudden, the momentum can really rapidly shift down. And that's really the thing I've been talking about with you for quite a few months now, since markets were right at the highs. I was pointing out to you the old high from 2007, that high from 2020, and we've just been flirting with that now for quite a while. And the setup is such that if we break below those lows, it really is confirming the false break of the 07 high, the 2020 high, and just a bit of mean reversion is going to take place because we've had a very sharp rally without much of a correction. So, a correction to the midpoint, even to the buy zone would be possible. So, a long way down, basically. So we're still in the early stages of this sell-off. A lot more can come. So, that just is the situation for us right now. So I'll just shift over to the US market. And the thing I want to point out here first is the monthly chart. And that is just on the edge of that long-term trend shift from the moving averages point of view. You can see there that 10-month exponential getting close to the 20-month simple, very close. And that hasn't done that for years. It's only done it once in the last, 12 years. That was only for a second. Back there, we had a small breakthrough, which was a bit of a false signal, and then it turned straight back up and has been up ever since. So, this is the first thing you need to see before you get, really concerned about what may be coming. So we're still, that's why I'm saying, still early in the sell-off. If we go back to 2000, go back to 2007, you can see the monthly trend shift is well before the real selling begins. So that's sort of how neatly poised US markets are. To the weekly chart for you, this is where it does get interesting. If I just go in close to analyze the correction so far, we know that the weekly trend turned down a while ago. I was, analyzing this back then, got up to the sell zone of the wave down. We got the sell pivot there, which was a beautiful signal. I told you about that, said watch out for what's to come. And we've had the big sell-off, but a few weeks ago, we did get that weekly buy pivot. So that is the sort of final line of support, I guess you'd say. As prices are selling off down into that weekly buy pivot, there can often be strong support. And if that strong support is found down around that level, that is when it kicks higher and we could be in for a bigger rally than many expect. That doesn't mean that down the track it's not going to roll over again and finally have that really big sell-off. It's just that until I see prices, really bucketing below the low of the whole correction, which is down around 3,800, which is not that far from here. And, you know more than me, if the CPI figures were high and hot, maybe it's down near there now. I don't know. But it's once it really busts below the low of the correction is when I get super bearish. Where it's going now is sort of a spot where people can get caught out, where it can look really terrible, but it goes into the buying support of that weekly candle and can have a bit of a spike. So it's sort of a setup now where that CPI figure is all important. And whether it comes in hot or cold, it is going to be a fulcrum for the market for the foreseeable future, probably an opportunity for the short-term traders to go with the figure if it's hot or cold, and go from there. But definitely that ASX 200, now that the banks have started weakening, and I think they've been bought up pretty strongly over the last year, so they could have quite a bit further to fall. If the banks start to crumble, and especially, I guess, if BHP and Rio also, there's not a lot left holding this market up. Many of the mid-cap, small-cap space stocks have already been blasted and are in a bit of free fall. Plenty of stocks are just at a point of free fall where there's no bids left. Everyone's trying to get out and they're just selling off day by day down to pennies. So it is pretty serious out there. We're nearing that point of final capitulation, but we're not quite there yet. And as I showed you, that monthly trend shifting in the US could lead to, bigger things down the track. So it is certainly interesting times, and I have been warning you about this for quite a while. So hopefully the people who have been watching this and heeding those warnings are in a good spot and watching this without stressing out too much. And there'll be plenty of opportunities down the track, that's for sure. But I think I'll leave it there. I don't know what those CPI figures are, and they are all important. So I guess I'll have more to say about price action next week. All right, well, check out what I'm doing at Pivot Trader. Just click on the links below the video. And other than that, I guess I'll chat with you next week. Cheers.